Hello and welcome to the Weekend Investing Daily Market of 31st of July. And again, the Nifty tried to clear 25,000 but failed to do so. So the nervous 90s of the cricket analogy is playing out very well. And as I recalled, and we got late today due to some technical difficulty, but there is news that Infosys has been served a GST evasion notice of something to the order of 35,000 crores. So most likely tomorrow also 25,000 will remain elusive. Um, Overall, the market was stable. There was no major correction in any pocket of the market, but the market failed to go up also. Another piece of news that is going the rounds, or should I call it a rumor, but it looks very plausible, is that SGBs are likely to be discontinued. So we will have this discussion towards the end. I'll also show you the cost of the SGBs to the government so far. And was this a experiment that has really gone for the from the government's perspective? Yes, all the SGB holders still made a decent sum, but from the other angle, have they really short their flow? We'll discuss this towards the end, but please first subscribe the channel. Nifty staying there slightly higher than yesterday, 0.38%. 25,000 is the elusive rounding figure that Nifty is flirting with. I have no doubt that sooner or later that will get broken out. It is just a matter of time. Nifty Junior also gaining well today, 0.77%, new high 74,788. This is now also approaching a round figure of 75,000 that may prove to be some sort of a resistance. Mid caps, 0.5% up, 21,860. No problem at all here. Small caps made a new high but gave up some of the gains, minus 0.2% down. No worries on this. Absolutely fine in terms of where it is sitting right now. Bank Nifty is the laggard in this entire pack. Bank Nifty eking out only 0.1% gain again today. So last three, four sessions have been virtually within a couple of hundred points, although movement has been much more than this. And if this new proposal that is going the rounds that with no activity, each exchange will only be able to do one weekly expiry. Maybe Bank Nifty is going out of the window. The Bank Nifty trading, which is huge right now, may just be left with one monthly expiry on Bank Nifty, and that's about. So these new changes which are going to come is going to impact FNO segment a lot. It is going to impact a lot of traders who have built their careers or livelihoods around this segment, and they'll have to find newer ways of milking the FNO cow. Today's heat map, you have some good moves in life insurance companies. So SBI Life, HDFC Life, uh, the transport minister, Mr. Gadkari, is betting very hard for life insurance and insurance companies that GST should not be applicable on them. Maruti did well, 1.88% on the eve of numbers for the entire month. JSW Steel did 2.9%. MTPC has been running second day in a row. Asian Claims for Exchange has done well, 2.6%. Reliance was down 0.5% and HDFC Bank exactly 0.01%. In terms of and ITC and levers also did well. In terms of Nifty Next 50, you have many stocks that were doing well. So SRF, Brent, Zydus Life, Torrent Pharma, Havells, Siemens, Tata Power, Gale, and insurance companies all doing quite well. PSU banks and PSEs both taking a backseat today. Adani Power, despite seemingly poor results, stayed stable at 0.71%. In sectoral trends, metals lead the relay race, as I call it. Every day, a new sector comes and runs ahead, while others take a backseat. So PSU banks, real estate, which were running last couple of days, today have taken a backseat. Pharma, metals, commodities, and consumption stocks are doing all right. Tonight, there is a FOMC meet. Maybe you will see this video by the time that is done tomorrow morning. If in case you see it before the FOMC meet, there is I think a good chance that a surprise cut may happen tonight. Gold is moving very, very rapidly from 2380 just 2 days back, 2425. While I'm shooting this, there is expectation in the gold market that the first cut of the season is going to happen today. Let's see how it goes. Metals, as you can see, are way below the election day high. So this segment has not rallied since election, and still it is a good 4-5% lower than election day high. So there is a lot of makeup that can happen in case this relay race continues in this fashion. Stock spotlight is on Torrent Power, which rallied 16.5% today. So this is a consolidation of 3, 4, 5 months, which has really a sort of a cup and handle pattern has been made, and almost on day one itself, the targets are very nearly met on that. So these are strong patterns, and people are watching these patterns, and there is nothing magical in these patterns, but the fact that so many people are watching these patterns, these sort of manifest in terms of where the target for the short-term move is. On a monthly, you can see that Torrent Power struggled for almost 12 years before it really could break out of that 285 mark. And once it has done that, it has gone up in style to around 1866. Now let's come to the discussion on SGBs. You have been following a lot of content that I've been making on SGBs all these years, I think since 2017, 18. And I've been very vocal about SGBs being a very good hedge against equity investments, against any INR assets that we have, against any government that may be a no government. So SGBs are next best to physical gold in terms of hierarchy of you know, counterparty risk. So physical gold has no counterparty risk. SGB has a counterparty risk, which is Reserve Bank of India. You may say that there is no risk at all, but for purists, that may be a risk also. Anyhow, so why were SGBs launched? So sovereign gold bonds were launched because we had forex issues in 2015-16, and a lot of gold was getting imported to satisfy the demand that India has. India consumes 800 to 1,000 tons every year, and the global production is 3,000 tons only. So we consume almost a third of the global production, whatever gets produced globally in terms of mining, refining. We consume a third of it. And when we import all these 1,000 tons, we have to pay US dollars. And whenever we have a situation where our situation is not very strong in terms of reserves or our current account, then we want to discourage people from importing gold. And that's why the duties on gold import duties on gold went from 2% to as high as 15% recently, and government thought it was a prudent measure to issue bonds which will have returns based on the gold price, and they will be tax free also at maturity, and 2.5 and earlier 2.75% interest also per year to be given. Maybe this was the biggest miscalculation that the government or the RBI could do, because they will buy the gold to back this up. Almost 150 tons of gold was bought in SGBs in the last 8 years. More so towards the end of this period, and I'll show you that. So these was the news items that were doing around in the last couple of days, that the gold bonds may get discontinued. Um, Lower customs duty on gold is expected to potentially increase SGB demand. I don't know why this article would say so. Following the tax cut, SGB prices on LNS dropped by 2 to 5%. Gold prices on M6 fell by 4,000. So about 9% was the impact. It came gradually. MCX had already discounted 2-3% before the budget move. Few of the series of the initial SGBs have been redeemed, but a lot of series have to be redeemed, and there is one which is coming to maturity on 5th. This is how the customs duty or the import duty has moved from 2% when SGBs were started to be issued by RBI. It was already at 10%, and then it went to 15% also. So all SGB holders have bought it at a price, whatever was the gold price, plus 10 to 15% import duty. And now they will get redemption at whatever is the gold price, plus 6% import duty. So then from that point of view, many SGB holders are feeling cheated. This is the issuance per year. So you can see that of the existing issuance, significant of them have come post-COVID. And initial years were not so hot in terms of percent in volumes in SGBs, but in 2020, 2021, 2023, there has been a deluge in terms of the number of SGBs issued. So the reason for import duty cut, according to the government, is that illegal smuggling was happening, and that is causing harm to the official market. Uh, of course, while cutting the duty, the imports that are coming in even at lower volumes, government is giving up some of that import gains. But then there is rumor that the GST on gold is going to go, so government will make up there to some extent. Some people have the you know a sort of a claim or an allegation that government has done it so that the outgo to GB holders in terms of whenever things happen into maturity is going to be 9% lower now. So you sold something at X plus 15%. Now you're saying I'm going to pay you only X plus 6%. X could have changed in that time period as per the gold, but that was by design. But the duty part is what was in control of the government back then also and now also. So can be seen that they have changed the SGB holder by cutting short this duty. Now, if you were to see that, um, how much of the SGBs are still pending. So let's take some calculation here. Uh, this is data from RBI in terms of all series. What is the total tonnage that was introduced in each series? How much was the price of the issuance and the total price? If we combine, you will see that 146 tons of gold, 147 almost tons was issued, uh, and the amount for that is 72,000 crores, 45 lakhs is the amount of issuance. Now, if we go to a, uh, sorry, I just forgot it here. So, if we go to the today's price on this, and yeah, here it is. So, average cost so far issuance, what has been done is 5,100, and today the price is 6,900. If we were to replay aggregated that today, just for argument's sake, government has to pay out 97,000 crores. It sold these bonds for 72,000 crores, so it is actually short by 25,000 crores in terms of its outgo for the cost of raising this money. Which, if I calculate an XIRR, which my team has done a splendid job in doing that, is 10.5% without taking into account the 2.5 to 2.7% interest on. So if I were to add that to this figure, easily the government's cost of raising this bond, money from this bond is beyond 13% so far. It could go even higher actually in the future. So just imagine government bonds, government issues money normally at, 5.5, 6%. And here it is had to issue 75,000 crores at more than 13%, on which it's not getting any taxation also. Tax benefit, tax on the gains also. So it's a huge, huge. I mean, if I were the government, I would say it was a huge mistake by me. I mean, almost like I was made a fool of by whoever was my advisor. The- I raised money at 13%, whereas I could have raised money easily at 6 or 7%, and and now I'm having to scamper to pay this back because I was foolish enough not to buy more than 40 tons of gold to back this. Of course, the general results have been rising, but there is no official statement that this 146 tons of gold liability that the government RBI has any backing separately here. It has to be paid, right? Tomorrow, if something happens, let's say there is some global shock and gold goes to 2 lakh rupees from 70,000. Government will have to pay the difference. Or it will have to say, okay, we are not fulfilling our promise, in which case, it's a default. So whenever you are issuing a bond and when the bond is linked to the price of a commodity and you're not backing that commodity in terms of holding, you are essentially playing a naked game. It is as well as shorting options without holding the underlying and that's what the government seems to have played, and in my view, lost big time. And now they're scampering to somehow reduce this liability, and they managed to do by 9% so far. Maybe that 6% also will go away in due course, but that is just a guess. So, what is your take on this? How have you seen this SGB fiasco? I would say that has happened. The saving grace, the silver lining is that SGB or the gold price has gone up during this period, and hence investors will not mind this 9% loss, although it is a significant loss. But had gold not changed price in the last 8 years much, it would have really been a very big hit to the investors. And to some extent, investors or subscribers are feeling the pinch and are feeling, I would say, the confidence on what government speaks and what it delivers has been damaged. And I think learning from all this episode, government is probably thinking of not further issuing any SGBs because it is a lose-lose proposition for the government. Please let me know your take on this. Do share this video. Uh, if you liked it, please do give it a like as well. And I'll be happy to read your comments. Please. Thank you. Bye.